How much do you believe the company's products will be valued in 3 years? As a financial backer of Tesla, the stock of Tesla is currently trading below its valuation. Although this may seem like a huge problem for investors, there are a few reasons to stay optimistic about the company. One of these is from the executive's venture capital firm, ARK Invest, and it is definitely something to watch out for. The company claims that in just 3 years, the value of each Tesla share may increase to as much as $15,000. There is absolutely no reason for you to pass up this opportunity. According to a recent study by ARK, the price objective for the Tesla split has been adjusted to $1,500 per share in 2026. Tasha Keeney, an ARK CFA, revealed this and underlined that Tesla is far ahead of the competition. According to Keeney, Tesla has more data than some of its competitors and has driven more than 1 billion miles in its full self-driving beta. A hint of this can be observed in the development of the company's FSD beta program, which has witnessed a 475% increase in clientele year over year and a 78% increase since the second quarter of 2022. What relevance does this have for Tesla? This video contains more intricacies, but before we get started, don't forget to hit the notification bell, like, and subscribe. Since then, Tesla's FSD beta fleet has expanded gradually, reaching about 160 clients in North America in Q3 2022, given that Tesla's FSD beta fleet now totals 185,000 cars. This indicates a 475% annual growth. In a similar vein, Tesla benefits greatly from customer data. The car maker has prioritized gathering and using all available data analytics from its car owners. Since the beginning, in actuality, Tesla has collected more than 3 billion miles of real-world driving data since 2018, much more than its closest competitors. Wheel-turned vehicles and other Tesla vehicles are causing a stir on the roadways. They generate a detected data plate that is used to develop new or better algorithms that are subsequently transmitted to the car via over-the-air updates. Accordingly, Tesla owners are not just using their cars to get to work or conduct errands. They are also teaching the motors as they go, and for a car company like Tesla, this is no laughing matter. Keeney claims that, thanks in large part to the anticipated rise in electric vehicles, Tesla is still on pace to reach its 50-year growth rate. Because of the growing need to lessen dependency on imported oil and the fast dwindling petroleum reserves, electric car usage is expanding. Rising oil production costs result in high oil import costs, and countries that rely heavily on oil imports are required to make large investments, placing a pressure on their finances. According to an emerging research analysis, EVs reduced emissions are encouraging their adoption, which is anticipated to accelerate future market revenue development. Compared to cars fueled by gasoline or diesel, electric vehicles (EVs) produce fewer greenhouse emissions and air pollutants. In addition to using rechargeable batteries extensively, these cars don't emit exhaust emissions, which constitute one type of pollution. Because EVs run on batteries and fuel cells, they are less dependent on imported oil. This element is anticipated to propel EV adoption over the coming years, and the global market, which peaked at $238.67 billion in 2021, is projected to grow at a compound annual growth rate (CAGR) of 20% by 2030. Electric vehicles are already gaining popularity, and this trend is only expected to increase. These cars help create a sustainable future by not releasing harmful gases or smoke into the atmosphere. Furthermore, governments' growing investments in R&D as well as other government programs, such as favorable tax laws, financing for car charging stations, and subsidies for buying those cars, are opening up significant revenue growth prospects for EVs over the coming years. It is anticipated that these factors will propel market revenue growth. According to Keeney, electric vehicles are still the way of the future, even though these considerations are powerful motivators for their adoption. Different rules, such as ARK Invest's recent sale of about $40 million worth of shares in another diagnostics firm from its portfolio and replacing them with Tesla, demonstrate great trust in Tesla. Despite these catalysts, the company purchased 13,243 shares of Tesla, giving the automaker up to 8.83% of its funds holdings. In a similar vein, Cathie Wood, president of ARK Invest, believes the stock will experience significant increases in the future. This stock could increase by almost 5 times in the next 5 years just from electric vehicles. And if you believe in autonomous vehicles at all, It's more like a 13-fold increase in the next 5 years, she said. We are as bullish about Tesla as we have ever been, stated Wood. She believes that Tesla's significant worldwide price reductions are a wise move. The carmaker has the lowest cost structure and is innovating the most aggressively, therefore it can afford to do this, she noted. According to Cathie Wood, other automakers will have to follow these price reductions, but it will be very detrimental to their margins and profitability as of right now. Cathie Wood has predicted that the energy stock surge will soon come to an end. In a prior webinar, she reaffirmed her optimistic assessment of Tesla, predicting that the company will continue to increase its market share as the world's oil demand declines by at least 30% over the next 5 years. She went on to say that the company's recent aggressive price-cutting actions will probably continue and put pressure on other manufacturers to follow suit. After the Federal Reserve's monetary policy last year damaged investors' interest for tech-heavy bets like Tesla, it has rebounded. Expectations that the central bank may halt its aggressive rate hikes are increasingly being factored in by traders. The Fed's fast pace of interest rate hikes last year had a significant negative impact on technology companies, which in turn affected ARK's stake in Tesla. Tesla bears decreased their price projections for the carmaker, driving it below forecasts. And this sell-off was their ideal situation. Wood, though, thinks the Fed's tightening cycle is almost over. A turn, she argued, would reinforce the growth-oriented approach of her fund. Bears of Tesla should keep in mind that, in spite of the sharp price declines, individual investors continued to purchase Tesla stock in anticipation of a potential stock split. Retail investors made significant purchases of Tesla shares in July, which helped the whole U.S. market experience a fresh upswing. Retail investors had not been this optimistic since the summer of 2020, according to Vanda Research, and Tesla purchases were skyrocketing. Tesla topped Vanda's weekly retail trade tracking, with a net retail purchase of $693 million over the last 5 days. Vanda noted at the time that the 3-for-1 stock split proposal was the reason for this robust buying activity. Retail investors thought that stocks frequently rose after a split announcement, even though a split shouldn't actually impact the stock price. Vanda said that as long as the surge persists, retail investors will probably keep purchasing tech and single stocks. Individual investors' trust in the EV manufacturer remained unchanged in December, marking the end of what felt like Tesla's worst year ever. Vanda claims that since the beginning of the year, retail traders have been aggressive buyers of shares, pushing their net purchases to a peak in early December in Q4. Viraj Patel, senior strategist at Vanda, claims that over the last few months, retail investors have purchased more Tesla shares than they had in the preceding months put together. It's a trader's paradise for institutional investors, he said. And you have a buyer who is obviously not reading the basic indicators. Sales of Tesla are anticipated to soar in the upcoming quarters. During the company's last quarterly earnings call with investors, Elon Musk, the CEO, painted a positive image of the demand for the company's automobiles. According to Musk, Tesla had received the highest orders of the year in January alone. He added that the business has received orders that are twice as high as its production pace. ARK Invest is probably still as optimistic about Tesla as it has ever been, since the automaker is headed for enormous success in the future. Needless to say, Tesla is setting the standard and will do so for a while to come. However, what are your thoughts? Please share your thoughts below. And don't forget to include your assessment of Tesla. Additionally, feel free to tap on this following video if you're interested in learning more about what Tesla has been up to in recent days.